So how can you send all of your income to the line of credit when you have other bills to pay? Okay, if you still got to make a mortgage payment or a car payment, how can you just send all of your income directly to the line of credit? Okay, that is a fantastic question that came in from one of our viewers, and we are going to discuss it in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you are new to the channel, make sure to click subscribe and click that bell so that way you get notified on any and all of our future content. So in today's comments section video, we are going to be answering one of your questions. And again, guys, I love the questions. Make sure that if you have questions as you're watching our trainings, watching our videos, dive into that comments section. Okay, what you'll find is that this is a very supportive community, and I find it really cool when I go through the comments and I see other folks answering the questions, referring to other videos that are here on the channel to kind of take that next step as people are kind of deepening their understanding and furthering their education here. And so, it's really, really cool. So again, as you guys have your questions, get those into the chat, get those into the comments, and we just might make a video just like this to answer your specific question. So today's question is coming in from Teacher Tim, and or maybe Teacher Time, okay? But what it says is, how can you pay $5K into the line of credit when you still have a monthly mortgage payment and other expenses? And what he's looking at is he's looking at our main, overview webinar, how to pay off your mortgage in 5 to 7 years, where we're taking all of our income and sending it into the line every single month. And so to answer this question here, how do we do that when we still have those payments? We are making all of those expense payments in this scenario, we're making all those expense payments using the line of credit. Okay, and as you see in there, we're showing we got $5,000 worth of net income going into the line, but yet we have $3,000 worth of expenses that we're accounting for in the example. And $1,200 of that is the mortgage payment, about $600 of that was the vehicle payment, and then we had lifestyle expenses for the rest. But either way, the mortgage payment, the car loan payment, in this illustration, we are using the line of credit to make those payments. That's what allows us to go ahead and send all of our income into the line, is because we're able to use the line to make all of our payments. And since we have positive cash flow, in this example, we got positive cash flow of $2,000, the debt on the line, or the balance, will go down every single month by your positive cash flow number minus any interest that is being charged by the line, okay? In this illustration, and this video is from a few years ago now, but in this illustration we're using, unfortunately, and not something I would recommend, but we're using a higher interest credit card in this illustration just to show that it can be done even with a high interest credit card. Now, is that preferred? Absolutely not. If you've seen any of my other videos, what we like to use for this is 0% interest. If we're not gonna go all in one loan or first position HELOC, the next best thing is to come on in with 0% interest balance transfer credit cards, where hopefully we can get a 0% fee on the transfer. But even if there is a little fee, 3%, 2.5%, we got to pay a little fee. If we're able to do 0% interest chunking, where we're able to bring it over and pay 0% interest, and we just have to factor in a couple $100 fee, typically the savings in interest is going to outweigh the balance transfer fee, if there is one, by quite a significant margin. We're going to save a lot more here than we are paying this little fee. So it's still going to make a ton of sense. But then from there, we're using that line of credit to pay all of our expenses. So we're paying the mortgage, leveraging the line. Okay, we're paying the vehicle payment, leveraging the line of credit. And again, now, if we're in a scenario, and again, kind of since I opened up Pandora's box there talking about the fee, if we're in a scenario where we're paying a balance transfer fee to do our chunks or to pay our loans, right? A lot of our regular expenses, we can use the line and pay for it, just kind of swiping the line or paying for it online. But when it comes to leveraging the balance transfer checks, or even using a service like Plastique where we got to pay a bunch of fees, again, we want to avoid as many of those as humanly possible, okay? Which is obviously the point of this whole strategy in the first place, is we're trying to eliminate senseless interest that we're paying out. We're paying the banks way more interest than we need to to pay off these loans. And so we're trying to reduce that. So we certainly don't want to add a bunch of fees to offset what we're saving, but we're looking at a small balance transfer fee that's typically going to be minor compared to the big amount that we're saving in interest. But you do have the ability, okay, to kind of go deeper on even your question, is if our concern is, okay, either I don't want, if my line has a balance transfer fee, I don't want to have to pay, 2.5% every time I pay my mortgage or every time I pay my car loan. So if that's the scenario, and we're looking at some additional fees there, what you would do is you would just pay all of your bills in cash. Okay, and this is where you're gonna have your checking account still open for payments. Okay, so you can leave enough money in here to make all of your payments. Okay, especially any loan payments that would have to be subject to any kind of balance transfer fee to get onto your line. If that's the case, pay those in straight cash and then just use your cash flow that's left over, send that to the line. Okay, so you don't necessarily have to run all of your expenses through the line, especially if we're going to be subject to any additional fees. So that's one additional thing to kind of look for. But again, in the video, the reason that we're able to do it is because we're using our line to pay the bills. But again, you don't necessarily have to do that, especially if we're subject to any fees. Pay the bills in straight cash, use your line just for chunking, okay, and then send all of your cash flow to the line. So you can certainly do it that way, and the strategy will be just as effective. So hopefully you guys found value in this training and in this discussion. Again, if you did, make sure to give this video a like and give it a comment below. And of course, if you have any questions about any of the videos or any of the content that you've seen on this channel, make sure to put your question in the comments section of that video, and we might just make a video just like this to answer your particular question. Have a great day, everybody. We'll see you in the next training.